Welcome back to another week in review. We're looking at the week of March 24th, coming off of OPEC's last week contract roll. We're going to be talking about M contract specifically going forward. H contract is expired. Some things to start off this week. Not a very data heavy week, thankfully. Obviously, last week was huge. We had the FOMC rate decision. As well as option expiry roll. It was very chaotic as far as data releases and positional changes, etc. So this week's fairly light. Not too much to really worry about in the data department, at least until Friday. So Monday 9:45 we have manufacturing and services PMI. We have Bostic speaking at 1:45 p.m. We have Barr speaking at 3 p.m. So things to keep in mind on Monday. Tuesday, again, pretty light, 9 a.m. Williams speaks. 10 a.m. is consumer confidence and new home sales. So probably not a massive impact there. Consumer confidence can kind of get a little bit jittery sometimes on the tape, but nothing really major. Wednesday, 10 a.m. 10 to 1 basically on Wednesday are things to be aware of. So we have Kashkari as well as another Fed speaker and the 5-year note auction at 1 p.m. Should go back to Tuesday. We have the two-year note auction at 1 p.m. on Tuesday as well. It's not listed on here, but something to keep in mind. Thursday, we have the final GDP print, or projectional print, as well as jobless claims 8:30. So Tuesday morning, 8:30 pre-market, we'll have some movement for sure. And then Friday is the, I guess, most important day for data that we have. PCE hasn't moved us too much, but 8:30 a.m. we have the PCE print as well as personal income and expenditure. 10 a.m. consumer sentiment, and then we have another U of M inflation expectation print, which has had some market moving implications the last few weeks. So I think as far as the week goes, Friday is going to be the big day, or scheduled data at least. I think Trump speaks once or twice this week. I'm not sure. I'll have to look back at that. But barring any additional tweets from Trump, we also have the tariff announcements for April 2nd. So if we see anything obviously come through in the wire about updates to tariffs, etc., expect some tape bombs, expect some increased volatility as we get in the Trump market. So can't really plan for that. You just have to take that as it comes. Intraday. So. Starting off with the S&P 500, ignore this, that's wrong. Starting off with the S&P 500 ES futures. Last week obviously it was roll. My chart is a little wonky here, so don't pay attention to the right-hand side on these summary profiles. These are wrong. These include the first day of H contract because I don't roll my contracts over until Tuesday. So with that being said, everything else is valid on this chart. ES put in a short-term balance range down into the 10% corrective low we had at 5500s. We broke away from that balance range and we basically printed almost a perfect balance extension from the balance lows here, or balance highs here to balance lows, to these balance lows to balance highs. So we broke away from short-term balance and 5-day balance, and then we put in another 5-day balance range last week on a very messy up and down range. The critical thing I was looking at last week and the critical thing I'm looking at this week is 5650s down into 5641, the unfilled settlement gap that we have for the H contract. So as far as what I'm interested in this week, the case could definitely be made that we have a short-term bottom in at 5509s. It was a full 10%. We got a full 10% correction with a daily close below 10%. So the argument could definitely be made as far as what's succeeded that is that we have a short-term bottom in and we are potentially putting in higher lows from here for a march back up to some of the ranges that we broke down from to back test them. Last week came very close to testing the 200-day moving average, just this purple line right here as well. So we came very close to back testing this as well. The flip side of this argument is that we could be looking at potentially a lower high for another continuation leg down. So I think the big gauge for me this week is if we're staying above this 5-day balance range here, if we're staying above 5650, I look at this as buyers continuing short-term control. And that to me would lead to continuation moves back into 5800s to 5850s is really where I'd be looking. So as far as setups from a trade perspective, I think the simplest thing to do is really play the extremes of this short-term balance range. But as far as where I'd be looking immediately, we closed another week under 5720, which is a massive level on high time frames. That to me makes me feel like these balance lows are exposed again. Had we closed today above 5720, I would have felt better about immediate continuation back up into this balance range high and potentially getting some breakout. These equal lows down here, as well as an unfilled settlement gap of 41, makes me feel like we could potentially see a sell early in the week that gets us back down and tests these range lows. So there's a couple things that are going to be important here. So we had 2 days overlapping or multiple days overlapping opening ranges at 5670 to 5664, we'll call it. So basically the bottom of Friday's value. If we're seeing sells, so Sunday open or Monday, if we're seeing sellers bring us back down even for a simple backfill of this range down here, if we're seeing inability to sell below 5660s really, then I think what we could look for is the long trade that gets us back to last week's POC up to 5710s. If we see a nasty trap, so if we see a sweep out, basically a punch lower, an impulse lower down into 5640s that fills the settlement gap, sweeps out these lows, and then bids back above, I think that's a really nice long setup this week, and that would be probably a trade I would just take and try and hold and ride us back up to last week's POC at 5710s to 5720s, and ideally try and get back up into these highs and break away from these highs. Basically what that would look like is a lot of volume, a lot of sell volume that gets put in and met on the bid below 5740s, and then we snap back up, it gets lifted back up, and we start bidding back above 5650s. I think that would be a really nice trap that could potentially get us all the way back up into these highs and potentially get us back above the 200-day, at least for a test, back up into the range lows of January 5800. That would be big. That would be a really nice setup. I don't know if it's going to happen. But that's the perfect long setup in my opinion that I'd be looking for this week. There's a lot of little areas in here to pay attention to. Like I said, I think the big thing early on will be, strength to me early on is that we can't even get down into these lows. If we start seeing a bid form down into 5670s to 5660s, that gets bought right back up. Again, I'll try and be on the long side and get us back up into these ranges. The primary short trade I'd be interested in is if we do get a punch below 5640s and we get continuation selling. If we see the bid just get completely pulled off the ladder, if we see a very thin book down there, I think losing 5650 to 5640 leads to a pretty nice liquidation and probably a really nice short trade that gets us down into 5620s down into here, and then into the prior balance halfback of 5570s. So basically just using this as the gauge this week. Where I think another long trade could present itself is very nice bids above 57.14, so last week POC, to 57.20s. So if this week, if we see immediate strength and we see a lot of volume and a lot of buying come in and get us above 57.20s basically, and we see continuation buys, again, I want to stay on the long side and I'd be looking to get into last week's highs at 55.70s and back up potentially into 57.50s and get us back up into potentially like January's lower range, down into 5800s, or up into 5800s, I should say. It's been a long week. NASDAQ, again, pretty much the same idea, short-term balance that we're in right now. NASDAQ has still been weaker. So if we're going to see strength in the market, we really want to see NASDAQ leading. We haven't really seen that yet. And from a higher time frame perspective, NASDAQ still looks pretty bad. Both, to be totally honest, both charts look pretty bad. It looks very possible that we could set another lower high for a continuation down. But with that being said, I think this is just, we just play this day to day as a day trader, as a short-term time frame trader. I'm not really looking, I'm not really looking at it in the sense of, we're going to get 3,000 handles of range here. I'm looking at this as intraday and where is it strong and where is it weak. So I think as far as the NASDAQ goes, again, early signs of strength to me would be sells that get into or just a general back test that gets into 19730s to 19750s. This is very well bid the entire week. It was in the regular trading hour sessions. It was bought pretty aggressively on Friday. So again, if we see a bit of a drift back down, back into basically Friday's lower value range here, and we see this hold, then again, I'd want to try and be on the long side to get us back up into 850s, and then ideally back up into 19900s to 20K and potentially test up here. The other thing too, the area that I've been looking at mainly as like the gauge of strength here is 19900s. So similar to ES, if we get bids above early 19900s, then I think short term we have a bit of strength, or at least we're going to have a bit of covering again from late shorts, and we start pushing back up into the top of current balance and the regular trading hours high of last week up into 20,000 to 20,100. The primary short trade I'd be looking at on the NASDAQ, again, really, these lows do feel exposed to me kind of the same way that they do on ES. So I guess just to back up, another potential long setup, and probably the best long setup we'd get all week, similar to ES, is having a punch below 19,600 that gets bid right back up, and then basically recapture the bottom of Friday's range, and that can force reversion back up. And that's a trade I'd want to take and just hold and see if we can get back up into the upper parts of this range. So basically sweep out the lows, rebid it, and get back up here. Perfect long setup if we can get it, if we see buyers start coming in below. The short side is the opposite of that. Again, so similar to ES, if we start offering below 19,600s and we see some real aggressive selling, we see the ladder start to dry up, we don't really see anybody try and lift, that's when I'd be looking for the short trade back down into 19,450s to 19,400s, and potentially as low as the lower range of the prior week down into 19,250s. And then obviously there's that prior weekly low down here. So the other potential short trade we could have, and I think this would have to really coincide with total market weakness, is a press up into 20,200s, basically backfilling this gap, this ETH gap that we have, and then reversing. And when I say total market weakness, I think we'd have to see a turn in everything for that to happen, because I think once we start breaking back up, and once we start breaking back up 20K, 19,900 to 20K, that to me would signal short-term strength. So for this to really materialize, I'd want to see like weakness across the board on everything basically once we got up there. So a lot of buying that goes nowhere, big impulses up that get met on the offer, and then very aggressive sells back down. If that happens and we backfill this in reverse, I think on broader market weakness as well at the time, I think we could be looking for potentially move all the way back down, back through last week's range. Basically a gap fill reversal is what it would be. So again, a lot of things have to line up for that to happen for me, because once we start getting above these areas here, I'm not really interested in the short trades anymore. So I have that noted, but again, I don't know if that's going to materialize. It's just going to be one of those weeks that we take day to day, basically. So that's pretty much it. Not much to really worry about as far as data this week until really Friday. Tuesday some, but again, really Friday is the big day. Thankfully, most of the noise with roll and with OPEX is out of the way, as well as the rate decision. So hopefully that helps. If it does, please like the video, subscribe if you haven't. Thanks.